The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Checking in on Bitcoin again, the CoinDesk Bitcoin price XBX index is at 33,176.55 cents. That's up 1.77% on the day. And the CoinDesk Ether price, ETX index, 2,136.69 cents. That's down 6.9% on the day. So if you've been looking at the crypto blockchain rabbit hole for as long as I have, you may have come across our next guest. He has nearly 500,000 subscribers on YouTube, and his videos providing analysis of cryptocurrencies have received more than 35 million views. I'm talking about Nicholas Marten, CEO and producer of the Data Dash YouTube channel. He's also the CEO of a new app called Digifox. Nicholas joins us now to discuss the crypto markets and the very active YouTube crypto community, his app, and more. Welcome, Nicholas.
Michael, Emily, Lawrence, thank you guys for having me. It's a pleasure.
Thanks.
So you got some charts for us, Nicholas, to take a look at. Why don't we call up the first one?
Yeah, for sure. So I wanted to spend some time here to kind of put a premise or understanding of where we are within the market now, because I think there's been this consistent debate where you're either on one end or the other of, oh, we're in a bear market or correction. It really is one way or the other. So I wanted to spend some time to talk about the recent correction that we saw and compare it to previous historical price. And this one focuses on the more exaggerated sell-off or correction that we've seen this time around, and why I'm
Nicholas,
making the case that. Oh yeah. Mm-hmm.
When you talk about exaggerated sell-off corrections and rallies, is that because of leverage?
Yes, I'm actually going to build on that. That's a great point. Yeah. Basically, what you're what you're seeing here, it's a very good point. So if you take a look at the chart here, we have basically three major market cycle kind of rallies we're analyzing, as well as the following corrections. They're just mid-cycle corrections. So these aren't, for example, the bear markets where you have the full peak top of the market and then correct down a full 80%. And one of the reasons that I wanted to bring up this chart here is because if we analyze these three mid-cycle rallies and corrections, you can see that over time, in this case, we're expecting lower returns on the upside, and then outside of that as well, we should be expecting, at least to the broader analysis, most people, the typical 30-40% corrections, because most people are analyzing 2017. When in reality, what's really interesting about this chart is that as time progresses, usually each cycle takes longer. And what we saw here between the 2017 consolidation rally, the first actual rally from the lows, which took over, in this case, we're looking at a 2-week chart, so well over 70 weeks here in this case to actually complete and go up around 370%. In this previous rally from the lows of back in December 2018, we were able to do this in less than half the time period, around 30 weeks, and we pretty much rallied the same exact percentage amount. So to your point, actually, in this case, Lawrence, like what we're seeing here is these exaggerated rallies and then also exaggerated corrections due to increased leverage trading in the market, with the abundance of lending platforms where you can borrow stablecoin credit and increase your exposure to the crypto market, or borrow digital assets and sell them, effectively short selling the market. What we're seeing is exaggerated short squeezes on the upside from people trying to short the market, which is dragging prices higher. And then outside of that as well, we're seeing a lot of longs getting liquidated, and basically these platforms having to sell the underlying crypto collateral.
Let's move into your second chart here, Nicholas. Let's check we are running short on time. So let's look at the second chart here.
Yeah. So the second chart here is talking about the expanding cycle theory, from basically taking a look from top to bottom in the market. It tends to be that from bottom to top, we have expanding cycles over time. And what's interesting is that if this really is a bear market, if this is the market top that people are so confident of and claiming that it's a full-on bear market, we're going against history quite severely here. We not only were shorter than the previous cycle here, but it tends to be that every single cycle expands around 11 to 13 months from the previous one. You can kind of see this here as we're taking a look at the monthly chart here. So as we continue to go through these expansions, we can see very clearly that this time around we had a shorter cycle than the last one, and this would definitely go against the historical norm that we've seen.
Okay, and a third chart. I think Emily has a question on that.
Yeah, the third chart. So my understanding of the third chart is you're basically saying whether this is a bear market or a correction, it doesn't really matter, right? Why is that?
Yeah, so I mean, unless your time preference, that's actually a great question there, Emily. Like, unless like you as an investor, if your time preference is maybe a week or month, perhaps maybe the S&P 500 might be a better investment than Bitcoin or gold might be a better investment. But if you're looking at the longer term time frame, if you're really just looking to expose yourself to one of these three different assets on the chart here, where we're comparing Bitcoin, the S&P 500, and gold, really over the last decade, you can see here whether you're taking a look at a 10-year time frame or a general annualized return, Bitcoin overwhelmingly outpaces these assets. It could be even that we're in the middle of a bear market at the beginning stages and we go full through another 30, 40, 50% correction in price, but still in the next year or two, you're still going to be outpacing the S&P 500 and other assets.